Welcome back to Everything Money. We're glad you joined us again. It's Paul and Seth. No Mo today, Paul.
Mo is in North Carolina.
I'm fearful for my trading platform, my life. The bid and ask is yearning for Mo and his muscles, but he's not here today. We're talking about Boeing today. Paul, you know I love Boeing. One of the companies that I own, DGF Spray, that's our biggest client is Boeing. I sell spray that goes in these engines. It's wonderful. Boeing is investing. Virgin Galactic is going through like some weird merger spec. They're going public, and Boeing likes the sound of this.
They're investing in it.
And so I'd love to see if Boeing has the money to do this, how they're doing Boeing, because they've had a rough year not buying planes and airlines canceling plane orders. So today we're going to use our 8-pillar analysis to look at Boeing again. We're going to revisit Boeing. We've talked about this a lot, Paul. We're going to see what is the ticker symbol and how are the fundamentals of the company relaying that ticker symbol. Was it overpriced, underpriced? We'll tell you right now.
Speaking of fundamentals,
go ahead.
Could you please follow me on Instagram and Mo and even Seth?
Your transitions are so flawless.
Flawless transition. Please follow me on Instagram.
Now,
so I can.
Warren Buffett despises airlines.
Oh, Instagram or airlines?
Both, I'm sure, but airlines. You know, I told the story I was watching.
I don't think he despises it. I think he bought some airlines last year.
Are you kidding?
No.
I saw a keynote from Warren Buffett from 1998, and he said, in terms of value investing, if you could go back when the Wright brothers flown the first plane, they wished it would just crash. So there weren't as many airlines.
That's not the same as disliking airlines. What he's trying to sit there and say, guys, is what I always say. Just because an industry has a lot of growth potential doesn't mean every company in it is going to be successful.
You mean like Tesla and EV cars?
Correct.
Go on.
Just like the internet.com area, just like every other hype time in history. Just like cannabis. Mm-hmm. That's what his point is. His point is like, listen, overall as an investment, autos and airlines have been awful. Mm-hmm. Now, he did own some Delta, I believe. I think he sold some of it. I don't remember. But remember last year, he did own some pieces of companies. It's just because there's a lot of potential doesn't mean it's a good investment. And that's what he's talking about back then.
So let's see if Boeing is a good investment currently.
Now, the thing about Boeing, and we look at this analysis, our 8-pillar analysis is very good when it comes to a company that hasn't had massive drop in earnings like this one has. So what our goal here will be in this video is to look at it and understand what we need to look at going forward for Boeing, right? So Boeing, $125 billion market cap. They didn't make money in the last 12 months, so they have no PE. That's an X, okay? Their 5-year PE is 60. We want to see it under 22.5.
Yeah, boy.
So that's an X, right? Their 5-year return on invested capital, 1.4%. Now, why is this skewed, Seth?
You got to tell me. I'm stumped.
Well, because the last 5 years has 2 years of pretty much a shutdown where nobody was buying airplanes, right?
So their return on the capital they've made is not doing well.
No, it's doing awful. So these are the things to consider going forward. And when you do your analysis, you've got to wonder what's going to happen over the next 7-8 years, some sort of rebound, et cetera.
This is pillar number 2. We want this over 9%.
So far we have 2 X's,
pretty
right?
Bad. Okay. How about revenue growth over the past 5 years for Boeing?
What do you think is going to happen here?
Slaughtered the last couple.
It's a slaughter fest. Look at this. 91 billion down to 62 billion. I mean, it's horrible. They did 66 billion in the previous 12 months. I mean, this is just bad.
I assume the profit is in line with this?
Yeah, I think so. A positive 7.4 to a negative 8.8.
Oh, boy.
Yeah, oh boy is right. They never had any negative years in the previous decade until last year. Shares outstanding. Mm-hmm. Now, some sort of glimmer of hope. 601 down to 590. It's a check. But they issued a lot of shares in the last year, 566 to 590. Why? Because they want to pay for their cash flow loss. So instead of issuing debt, they issue more shares, people buy them, they can use that money to stay afloat as opposed to going out there and issuing more debt that affects everybody, et cetera.
Where can our viewers get this gorgeous software behind you, Paul?
Well, the software is available in the link below, Seth. Mm-hmm. But the most important thing about the software is we created it because all the subscribers were asking it. Literally, you go back to our comments early on, where can I get the software? And I said, let's just create some. So here's what you get. You get the mobile app. You get the 8 pillars, 30 years or more of financial data, stock analyzer tool, daily exclusive content for just those who have the app and the software, access to us 3, real estate calculator coming, stock screeners coming, retirement calculator, and the Discord community. Over 5,000, over 5,200 people are now in the Discord. It's organized by chat, by sector. You can go in there, talk about any investment you want, talk about ideas. There are literally people in there who are friends. One person in the Discord community told us about his uncle. Before he told any of his family, his uncle was given terminal cancer. It's become a good group.
I got a hell of a story of one of our followers, Paul, who's 19, saved up $20,000 already. been living in poverty, and I got to tell you the story.
20,000?
Absolutely, working his ass off.
Well, guess what? 84 cents a day. $20,000 will buy you a lot of. This software is only 84 cents a day, guys. You can have it for 84 cents a day. You're locked in at this price, as opposed to our competitors, $235 a month. It doesn't give you anything that we have. So it doesn't give you all that we have. So, anyways, moving on. The bottom line is this is absolutely necessary if you're serious.
Pillar number 6 for Boeing is our new pillar. This is total long-term liabilities. See, I have to read it, Paul, because I haven't memorized it yet. Divided by 5-year free cash flow. We want this number under 5, which basically means, Paul, we want their free cash flow. They have to have the ability to pay off all their total dets.
And they did take on a lot of debts, guys. Look at this. They have $77.2 billion in total long-term liabilities. But this is by quarter. Go look back at the end of 2019. They only had $44.5 billion. So they've really increased their total liabilities. So based on this, $77.2 billion, we then go to the cash flow statement. And the cash flow statement will show us our 5-year average free cash flow. Now, unfortunately, it's $900 million. Why? Because the last 2 years, they've lost $30 billion in free cash flow. They've lost that. But, so right now, $77 billion divided by $1 billion is about 77 times. We want it to be under 5. So it's a big X. Now for a value for Boeing, it's also an X. Guys, I think this is X's. Do we even have any check marks?
Well, Paul, now they're taking...
One check mark.
So they're taking this free... Are they taking free cash and investing in Virgin Galactic? That's the excitement, right? So what are they seeing in this?
That's not what... Free cash flow is after capital expenditures, not after investments or acquisitions, things like that. It's after capital expenditures. So, for example, if they built a new factory, because we're creating this new airplane... Like when the 737 MAX came out, if they were building it in a new factory, that would be a capital expenditure, right? And there's a difference between maintenance capital expenditures. For example, if they put all new roofs on all of their factories, that's a maintenance capital expenditure versus growth capital expenditures, which would be building a new factory. That's something you don't want to penalize them for. Why? They're going to create this new revenue stream inside their company. You want them to do that. Don't punish them for that. A new roof, unfortunately, as much as it's needed, isn't helping you as an investor except for saving you a few bucks on maintenance costs, right? Yeah. So guys, all around, this is terrible. So the question becomes, when it was stable, was it worth it? Well, what's the company's market cap? $125 billion.
Yeah.
Right? So let's go to their free cash flow statement. I'm going to look before this colossal collapse happened. This is what I'm going to look at. Let's delete this. Nice. They were growing their free cash flow quite nicely, selling for about 10 times free cash flow. So I guess my comment to you is this. If you believe the worst is over for Boeing, and if you believe that this year they're going to get back to this level and everything go back to normal, I would buy Boeing right now.
Yes.
I would absolutely buy Boeing right now because it's selling for 10 times free cash flow for the average of the previous 2 years before the collapse.
Boeing planes are used to launch Virgin Orbit rockets. That's why they're investing. So
I don't think that's a good reason.
Well, I guess the point is...
To me, it's a PR thing, maybe.
Yeah, but tell me this. Jeff Bezos was talking about space for a long time, and then all of a sudden, just a week later, Virgin Galactic, what's his name? The owner...
Richard Branson.
He goes to space, and it's not even like that big of a deal. Are they flying under the radar of interest? Or maybe, what can they do? I mean, if they keep this
maybe.
Boeing takes the planes.
Again, it's another example of what's the future of space travel? Probably, infinite. Way higher than it is right now. But does that mean every investment pay $100 billion to the company?
Too much.
Pay $2 trillion.
Way too much.
That's the point. It's like at some point, I sit there and even though the future growth of right now, we've had 8 civilians go to space.
Yes.
Okay, so if 8 million go to space in 40 years, that's a million times, which is. I don't even know the math. 100 million times percentage. I don't know what the number is. Does that make it a good investment?
I see.
That's the point.
If you got invited on Jeff Bezos' next trip, it's 10 million. Are you paying that?
I'm not. But I did put
5 million.
I did put my deposit down for the Virgin Galactic. It was only $250, but they're expected to be a $250,000 flight in so many years.
That'll be in your wheelhouse.
Well, I mean,
you've always wanted to do this.
I did. I have. I have always wanted to do this.
Ground
this is like
control,
a big thing
the
for
Major
me.
Paul.
Yeah, I've always wanted to go to space, and it's funny because my ex-girlfriend used to always say, "Yeah, you're not doing that." Well, so now we're not together. I'm going.
Just blow the cash and go. Like a trip to Hawaii.
But I think that's years and years away.
Yeah, maybe so.
So if you could get our software so I can pay for my space travel,
that'd be perfect.
That'd be awesome.
Sign up below.
Yeah. I just, I look at the Boeing thing and think, if you really think the company is from here on out going forward is going to be stable like it was before, but I don't think that's going to happen. So I still think exercise some caution. But if you want a dollar cost average into some shares, it got as low as like $89 a share back in March of last year or something like that. Now it's at 220, 212, whatever it is.
That is our take on Boeing, Virgin Galactic, the merger, all of it. Follow along, join the Patreon, fondle the thumbs up. As always, Paul, you know this.
Yeah, and follow me on Instagram.
Yeah. Thanks for watching. See you next time.